Anyhow, my name is Markus Heitkoetter. I'm the CEO of Rockwell Trading, and I'm the author of the best-selling book, The Complete Guide to Day Trading. And before we get started, just to let you know, a few days ago, I made this book publicly available to everybody for free as an ebook. And if you haven't grabbed your copy yet, please go to my website at rockwelltrading.com. You'll see it there. It is available as a free ebook until Amazon finds out about this, because I think they won't be very happy about it. They're selling it and it sells really good there. Anyhow, I just think that we need to fight ignorance, and there are certain things that traders need to know. All right, let's get started here. What are we going to talk about in today's session? So, you see, we'll talk about to help you understanding your emotions when trading and why your trading strategy usually isn't the problem. You see, guys, when FX Street approached me and said, hey, are you going to do a webinar today? I said, sure. So we were looking at possible topics, and I was thinking about explaining to you another trading strategy. But I think, especially today, you have some excellent educators who are giving you great trading strategies. But as you will see, despite all these great and working trading strategies, traders lose. And this is why I decided to do this session, how to deal with your emotions in trading, because this is so important. I believe this is even more important than your trading strategy, and you will learn today why that is. We will talk about a new mindset that you need to acquire and that you need to practice every day to make sure that you're not falling back into your old habits. And then, of course, how to deal with your emotions in trading. All right. But before we get started here, before we get into the session, here in Texas, I'm in sunny Austin, Texas. Right now, 75 degrees. It's beautiful here. Shortly past 9, so I just want to make sure. Have you all already had a great breakfast? Okay, this is a typical German breakfast, and I found this here. Isn't that cool? Okay, so that you know what I had for breakfast here, so we got to have a little bit fun here. All right, we have approximately 45 minutes. Now you know what a good German breakfast consists of, and surprisingly, here in the US, they all have it in one aisle. Isn't that awesome? Okay. Let's move on. According to the North American Securities Administrators Association, only 11.5% of traders are successful. So as you can see, 70% of traders fail, 18.5% are breaking even, and 11.5% are successful. So the question that we need to ask ourselves is, why is this? Okay, what is the difference? What do these 11.5% of traders do differently than the remaining 88.5% who are just breaking even or you don't make it? And guys, believe me, it is not a better strategy. It is typically not a better software. And especially these days, it is not more of proprietary information, okay? Because especially these days, all the information is publicly available through the internet. Whenever a report is being released, like unemployment report this morning, okay, a few seconds after it's released, you already know what was in there. So we all have pretty much the same information. It must be something else. And you see, what I discover here in the market is that the biggest problem of traders is their mindset. Because many traders have the mindset of getting rich quick. They have this idea that I can make millions with trading starting with less than $1,000 in my trading account, because all I need is a computer and maybe even an automated trading strategy, and everybody can make money with trading. And guys, if you look around on the internet, this is where you see many scam artists who are promising exactly this, that you don't have to do anything, you don't have to worry, you just switch on your computer in the morning and magically somehow thousands and $10,000s of dollars are deposited into your trading account. And they make it all sound so easy, and they present you all these shiny websites and great performance reports, and explain you the science behind their programs and how long it has been back tested and so on and so on. Don't believe this. As a trader, you need to have a plan. So let's talk about the top 6 reasons why traders lose money. And I've been preaching this for the past, I think, 4 or 5 years. So the reason number 1 is a lack of a trading plan. Okay? So important that you have a solid trading plan. And guys, you need to understand a trading plan is more than just a strategy. So what is the difference? A trading strategy basically tells you when to enter and when to exit a market, right? Entry signals, exit signals, and you exit with a stop loss, with a profit target, or with a time stop. And we discussed this in a previous session that we did here a couple of months ago. Anyhow, a trading plan is more comprehensive. A trading plan consists of 6 elements. The first element is so important. It's why do you trade? And please, guys, don't write down to make money. I know that we are trading to make money, but what exactly is it that you want to do with this money? And I'll tell you in a second why this is so important. So, what could it be? Why do you want to make money with trading? Well, it's maybe because you want to buy some toys, okay? You want to buy a jet ski or a boat or, I don't know, you want to buy a big screen TV, you want to buy a fancy house. So it might be that you just want to buy a thing. It might be that you want to give your family a better life, okay? It might be that you want to give your children a chance to go to college and basically not have to worry about money. It might be that you do it for your own retirement, that you say as you're getting older, you don't want to work every day and you don't want to worry about it. Whatever it is, write it down. Here's why. If every morning you look at this reason why, you will be a little bit more careful when entering a trade, okay? Because you see the underlying reason, your core reason, what is on the line. So very important, be aware of this. Why do you trade? It really helps you to become a better trader. A second element of a trading plan here is what do you trade? What markets do you trade? What currency pairs do you trade? Do you trade futures markets? Do you trade stocks? What is it that you trade? Third element is that when do you trade? And what times do you trade and what time frames do you trade? 5 minute, 10 minute, 15 minute daily charts and so on. Then at the fourth element, now finally we get there. Yes, entry signals. Number 5, exit signals. And number 6, very important, and this will be also part of the presentation here today, risk and money management. So these are the 6 elements of a trading plan. And now you see, very few traders even have a strategy. Even fewer traders have really a trading plan. Makes sense? All right, let's move on. So the second reason why traders lose money is the lack of discipline to follow the plan. I know so many traders who have a great trading plan, but it's in their drawer. And they get caught up in the heat of the action of the market and don't follow the plan at all. And why is this? And this basically leads us into the main topic of today's webinar. It is because of the failure to control emotions. Okay? So we'll talk about this here in a minute. Fourth reason why traders lose money is the failure to accept and limit losses. You see, Ed just had an excellent example here. For those of you who have been joining Ed's presentation here, when he talked about support and resistance and why previous support becomes resistance later on, okay? He said a smart trader hopefully bailed out when the trade went against him. Otherwise, this is the time when traders really become religious. And he had great examples here, okay? So, they're saying let your profits run. Unfortunately, most traders let their losses run. Don't do that. Accept and limit a loss. If you accept a loss, it does not mean that you failed. It just meant that the market didn't cooperate with you, right? Very important distinction here. Number 5 is the lack of commitment. Because you heard me saying this over and over again. Trading is a profession. Trading is a business and should be treated as such. I mean, from time to time, I get emails from traders who say, how come the charting software you're using is not available on an iPhone? Dude, do you really want to trade off an iPhone? Come on. I mean, for years, I've been trading from home, but then I realized that I have too many distractions at home, especially with two small kids, 3 and 6 years old, who are a little bit too active for their age. So, yeah, talking about distractions here. So, yes, as many other professional traders, I am going to my office every single morning where I have a nice and professional setup. Yeah, there was here the great comment. The beaches are full of traders with laptops. Right. Have you ever tried this, trading on a beach? Actually, I did. I wrote a blog post about this. Go to my website, read the blog. Hear what was going on there. You need to be focused. You need to be sharp. You need to be committed to trading. It is a job. Okay? It is a profession. It is a business. Admit it. It's a business where you can make a lot of money in a very short period of time. Okay? But nevertheless, don't forget that. And the sixth reason why traders lose money is overtrading. And you see, many of these mistakes are triggered by emotions, especially overtrading is usually caused by the following three emotions. First of all, revenge. Okay? Want to take revenge at the markets. We lost money this morning and now we want to get it back. So it's the market and us. We keep trading and we keep trading, okay, until we finally, hopefully, hit the jackpot, which rarely happens. Second reason for overtrading is greed. So we'll talk about how to conquer greed and fear here today. Because we want to make more money, we want to make millions in minutes, right? It's actually a title of a book that I recently saw somewhere somehow. And third reason is impatience, okay? We can't wait for the perfect setup. We just want to trade. All right. Let's move on. So let's talk about emotions. And guys, what are the emotions that we experience as traders? I mean, for those of you who are trading, what are the emotions that you are experiencing? And for those of you who are not yet trading, what do you think could be emotions? Pretend that you're trading, and what do you think could be emotions while you're trading? And also, while you're typing it in, what do you think? When are the emotions at the highest point, the most intense? Okay, is it before you enter a trade, after you enter a trade, after you close the trade? Okay, and I'll post the website here in a second. Okay. So emotions, when I'm losing, good point, right before. So what are the emotions? What are some emotions of traders? What are some emotions that you're going through? And while we are waiting for this, let me just quickly post the website here. Yeah, Pete got it here. Fear and greed. This was the title of today's presentation. Good one. Okay. All right. Fear. And it's quite interesting when you experience these emotions. When I'm losing, right before, straight after entering, okay, once the trade is open, when I enter a trade and goes the wrong way after I got it, very good answers, very good answers. Okay, so let's take a look at some of the emotions. Obviously, greed. I mean, this is why we are trading, right? We want to make a lot of money. So, I mean, by nature, traders are driven by greed. In fact, the markets are driven by greed and fear, okay? What else? Panic. Did this ever happen to you, that you were in a trade and then, I don't know, your quotes got stuck? Or you wanted to enter a long trade and you entered a short trade? You started panicking and a little bit like saying, "Oh God, what do I do now? What do I do now?" Or you went into a trade and suddenly there was an economic report release and the market just jumped up and down like crazy and you didn't pay attention and you're starting to panic here now. All right, what else? Indecision. Well, something that could happen to you shortly before you enter a trade, where you say, is this really the right trade? Is this really the right signal? Should I really pull the trigger here? And then you are in a trade and the trade goes against you and you wonder, should I give the trade a little bit more room, or should I narrow my stop loss? Should I get out of here, or will the market turn around? Or even if the trade goes in the right direction and you're ahead, you wonder, should I take profits now? Or what about the old adage, let your profits run? What should I do here? Okay, so definitely indecision. What else? Doubt. certainly after you experience a couple of losing trades, you start doubting yourself and your strategy. Start doubting your strategy. Does this really work? Or yourself, do I have what it takes to be a trader here? So, anger. Gosh, they just got my stop loss and now the market is turning around. These damn whatever, okay? You know what I mean? Ever get angry at the market here? Happens, right? So you see, there's so many emotions. And thanks for answering here. For most traders, the emotions are at a peak shortly after they entered a trade, because then you're getting really anxious. How will the trade turn out? Okay, and this is where really you start getting angry, where you feel this indecision, where you feel doubt. So you are in a trade right now, and this is when for most traders, emotions peak. Now, is this a good thing? Not at all. This is the worst thing ever, because while you are in a trade, you should be relaxed at this point and make rational decisions. What happens when emotions are flying high? You make irrational decisions, right? I'm always telling the story of my friend who is a boxer. And he says, you see, what you want to do when you're boxing, you try to make your opponent angry. Because if he's getting angry, okay, if there's emotion, then he's boxing more aggressively. He throws more punches. He doesn't take care of his defense as much as he did when he's rationally boxing here. And this is when you can land the punch that knocks him out. Okay, so you try to make him angry. And this is what the market tries to do with you, that you make irrational decisions. So it is so important that we have our emotions under control, especially after entering a trade. How do you do this? By knowing before you enter your trade when to exit. Always know when to exit, even before you enter the trade. Okay? Have a profit target, have a stop loss, and preferably put the trade on autopilot with a bracket orders. Most trading platforms allow you to place bracket orders that are automatically executed as soon as you are in a trade with a stop loss and a profit target. You have to be relaxed once you're in a trade, because otherwise, make irrational decisions. All right, you get the point here. So, a couple of, I'm just looking at the chat here from time to time. And it says, not trusting the moves after opening the trade. Absolutely. The first 100 pips are the hardest. Yes. On a buy, the spread is deducted. So you start in negative. Yeah. On a sale, you're placed on the ask. So you start off in negative. Good points, guys. Very good points. I see you're professionals here. It seems that you already got some excellent education here at fxtrade.com, right? Okay. All right, let's move on. Just for those of you who are new to trading, let me show you how greed and fear affect your trading decisions. And actually, I'm using an example here from a game show. And this actually put together last year when, for the first time ever, believe it or not, I saw a game show called Deal or No Deal. While I was zapping through the channels, I suddenly saw this picture. There was the bold guy in a black suit talking to another guy who was looking like a Boy Scout. And they had this suitcase there wrapped up in yellow tape, and I thought, well, okay, this looks funny. Take a look at this. So most of you are probably familiar with the concept of this show. What happens is that you have usually $1 million in a suitcase, and there are a bunch of other suitcases, I don't know, maybe 20 or 30. I'm really not a game show watcher. And what you have to do is throughout the course of the game, you have to eliminate suitcases. Now, based on the suitcases that you eliminate with the money in there, you get an offer from a banker to stop trading. Okay, so in the beginning, the offer is pretty low, but then it gets rather high. You get $90,000. He offers you $150,000 to stop trading so that he doesn't have to pay you the $1 million. Okay. Now, what happened here is that this guy was already offered, I think it was like $160,000. And for him, for his profession, I can't remember what he was making, but this was basically 2 years worth of salary, okay? Might have even been 2.5 years, something like this. But what happened? In the heat of the action here, The whole audience was shouting, just open one more suitcase, just open one more, okay? This guy said, today I'm on a roll, baby. Today is actually payback time. So what happened, he started opening more suitcases and started opening the suitcases with $100,000 in there, so they were eliminated. And the offer dropped down from $160,000 to below $100,000. But you see, what happened now is that he says, you know what? No, I already saw $160,000. He already offered me. I just keep going. Do you guys see how this relates to trading? Okay, you entered a trade and you already saw, let's say, 60 pips in profit. Now the market is retracing. You didn't take profit and goes down to 40 pips. But now you say, oh man, the market has already been at 60 pips. If it goes up again to 60 pips, I'll take my profits. But the market never does. Goes up to 50, goes down then to 30. And you see how greed, not taking profits while they are there, can actually destroy you. Did you ever make money in the morning and then give it back in the afternoon? Or have you ever been in a profitable trade that then turned into a break-even trade or a losing trade because you were too greedy and didn't take profits off the table while they were there? Well, eventually, just to finish the story here, this guy eventually got an offer of $220,000, and he came to his senses, and he took it, which I think was smart, because with this he could pay off his mortgage, he could be worry-free for the next 2 years or something like this. It was definitely good. So important that you have a profit target on every single trade, and that you have weekly goals, which we'll talk about here in a second. Okay, so this is how greed affects your trading decision. You see, irrational trading decisions, just one more, today I'm a roll. Very emotional decisions. You do want to avoid these decisions when you are trading. So, what about fear? Well, because of the fear of loss, it might be that even before you ever enter a trade, you're unable to pull the trigger. The fear paralyzes you. And you see, this typically happens after you have experienced a few losses in a row. Let's say you have 3, 4, 5 losses in a row. Now, you have a problem entering the 6th trade because you fear that you will lose again. And this is where you might go back to paper trading. And you see, there are some traders who spend thousands of dollars on strategies, books, and education and never ever execute a live trade because of the fear of loss. They look for a trading strategy with a 100% winning percentage. They do not want to take losses. Guys, losses are part of our business. Losses do not mean, again, that you failed. It just meant that the market did not cooperate with you, okay? So give it another try. Learn to deal with losses. If you can't accept the fact that there will be losses, trading is not for you. But you see, the true problem behind all this, and this is what only very few traders actually see, is confidence. Confidence or the lack thereof. It is the confidence in your trading strategy and in your ability as a trader to execute this strategy. And you see, losing trades are basically destroying your confidence. So let me introduce you to the 3rd month slump. A very typical trading career. For those of you who have been trading, probably went through something like the 3rd month slump. For those of you who are new to trading, let me tell you what to expect when you start trading. And really, don't hold me to the months here. It's basically the 3 phases. It's just very usual, or usually I see that in the first month, a trader is learning and back testing a system, okay? So maybe on a couple of 100 trades. So he's trying to find a strategy, reading through a bunch of stuff, and all looks good. So we're doing in the first month here a lot of simulated trades on a paper trading account, and everything is going right. It's going in direction. You're building up the confidence that you need when you start trading with live money and you're very happy with the results that you have been achieving thus far on paper. So now, eventually, in phase 2 or in the second month, you start placing the first trades. Well, look like this guy, you're happy. Okay, you're now officially a trader because you're trading with real money. Doesn't really matter what you trade. You could even trade the mini FX and just risk $2 on every, or $2 or $3 on every single trade here. Doesn't matter. I mean, you're placing trades with live money, so you're a trader and you are happy. So, in the third month, or basically in the second month, we see 2 possible outcomes. So what is a possible outcome? Oops, and this is where I should jump to the next slide here. A possible outcome is, hey, you have a couple of winning trades. You lean back and you say, well, that's pretty cool. So, is that good? No, it causes a bunch of problems. So what are the problems if you have here a couple of winning trades? So let's say out of 10 trades, you have 8 winning trades. What happens here is that you become overconfident. So you basically say, oh yeah, I mean, I knew this trading is easy. It's not that difficult. I got it down. I'm a natural here. So you start maybe increasing your contract size, your position size too early. Instead of being very cautious here and trading with a 1 lot or 1 contract, you say, oh yeah, I can do this with a 5 lot because again, I want to make $10,000, $20,000, $30,000 a week. You might increase your weekly goal too early, and you might abandon your rules because you say, oh, I'm so good, I'm a natural, right? Okay, so this could be a possible outcome here when you have a couple of winning trades. Now, another possibility is that after you place the first live trades, you have a couple of losing trades. So possible outcomes here are, or problems, doubt. Does my strategy really work? This strategy doesn't work. I know that I tested it on 300 trades, but here, after 4 trades, I had 3 losing trades. This probably doesn't work, right? So you doubt the strategy or you doubt yourself. Lack of confidence, and you say, I need to take another look at the strategy here. I really need to see if I can improve the system somehow. Or you might even give up and say, ah, no, it's not for me. Because you might have blown your account within a couple of trades here. So you see, basically, I mean, whether you have winning trades or losing trades, in the third month, you're doomed. Okay? And this is what many, many traders experience, that in the beginning, after trading live, usually after a couple of weeks, you see a significant dent in the equity of your account, that your account is going down, and you do not know why. Well, now you're getting an idea why that is. It's because you're either overconfident or losing trades or make you lose your confidence here. So, question is there a solution? Of course there is. This is why we are here. And we have another probably 15 minutes, moderator. Is this right? So we need to wrap it up here maybe in 15 to 20 minutes. Okay, so we're absolutely good in time here. Again, first of all, you need to understand that many traders have the absolutely wrong approach to the markets. See, what many traders do is they start off with a goal and say, oh yeah, I want to make money. Heck yeah. So what is my plan? Maybe I should trade. Tried this internet marketing thing, didn't work out. I tried investing in real estate, didn't work out. Tried buying foreclosures or tax liens or any of this stuff that I saw in infomercials, didn't work out. Now I saw another infomercial, and there was this lovely elderly couple that said, we made $24,000 on our first trade. And if they can do it, I can do it. So maybe I should trade. So what do I need to do? I go on the internet and maybe I read a book. Hopefully I get a free ebook. Okay, and for those of you who want a free ebook, go to my website, www.rockwelltrading.com, giving away my best-selling book, The Complete Guide to Day Trading, for free as an ebook there. Okay, how cool is that? All right, maybe they attended the seminar. You know this? Local workshops coming into a town near you. Ever heard that? Okay, and buy a strategy or hopefully get a strategy for free. So just join a couple of webinars or look around in forums and get a strategy, and then hooray, let's get started. And guys, you know this. In 2009, it never has been easier than this year to get started. I mean, I've recently, last year, extended a Forex Trading Expo where they opened accounts with credit cards. Hey, all you need is $2,000 on your credit card. You can swipe it here and boom, you have funded an account. Now you are a Forex trader. Well, this is rather scary, okay? I remember years back when you had to fill out a lot of paperwork before you could open an account here. But you see, so the industry is actually supporting it. But what you need to understand is what I said earlier. Trading is a profession. Do you really want this guy to defend you in court? You read these two books, Law for Dummies and Law 101, everything you need to know about the American legal system. Both books as a bundle available on Amazon, and probably, guys, they are really good books, but you know, that's ridiculous, okay? This is not enough to get started. I want this guy to be your shrink and tell you what are your complexes, okay, after you read Psychology for Dummies. Okay, one more example, and then we are coming into into the solution here, really. I just want to make you aware of the problem that is out there, and I really, really want to encourage you to take a very close look at yourself. I'm not pointing fingers here, don't get me wrong. But as you will see, is that often it is the trader, or the trader is the reason why he's losing, not the strategy here. So, let me give you another example, marriage. Okay, so let's say you have a goal and want to say, hey, I want to get married. Or maybe your mom set the goal for you and said, boy, you're 38 years old right now. Time that you get married. Okay, so what you do is that you go to a single bar. Okay, you spot the most desperate girl in that single bar here. You buy her a drink, but don't spend too much. You know, all this stuff with dating, this can get really expensive, or you have to buy flowers and buy presents and take her to a fancy restaurant. Now you just want to buy her a drink here, and then propose and say, hey, sweetie, do you want to marry me? And you get married. Yeah, right. Huh? This probably only works in Vegas, if at all. Okay? So what the heck does this have to do with trading? I mean, for those of you who are just tuning in here, am I in the wrong place? Isn't this about Forex trading or trading in general? So what does this have to do with trading? Well, again, I want to get married. Many traders say, oh yeah, I want to make money with trading. Instead of going to a single bar, they go to a forum or website. Instead of spotting the most desperate girl, find the website that promises you everything. Never have a losing trade again. I recently saw an ad. Gosh, I should have pulled it up here. It was a Google ad. Make $2,000 a day, guaranteed, only $4.95. So you could buy a fantastic ebook for $4.95 that promises you to make $2,000 a day, guaranteed. Awesome, huh? Well, if you lose $2,000, they probably refund you your $4.95. Okay. Anyhow, let's see. You buy her a drink, don't spend too much. You buy the strategy or you buy the ebook, don't spend too much. I mean, surprisingly, if you look around, it seems that $97 does the trick. Okay, $97 tell you your way to trading riches here. Get married, yeah, right. Make money trading, yeah, right. Guys, it doesn't work this way. If you come across something like this on the internet or in infomercials or in ads, okay, quickly run away. Okay. Let me see. Okay, couple of comments. Was this you? I won't tell. I won't tell. All right. So, let's see. Whole paradigm, want to make tons of money with trading. I just get one strategy that works in one market under a certain condition. I start trading, not successful, get a new strategy. This is usually the old paradigm that traders have in their mind. But guys, years and years ago, Mr. Ralph Vince did an incredible experiment proving that the strategy is not the problem. And again, let's go back to the previous slide. This is what many traders think. The strategy is the problem. If I start trading and I'm not successful, I need a new strategy. So what did Mr. Vince do? Mr. Vince had a controlled experiment, and he invited 40 PhDs. supposedly smart people, right? So he gave them, in a simulated environment, a trading system with a 60% winning percentage. They got a starting capital of $1,000 and were supposed to make 100 trades. Out of these 100 trades, as you can imagine, with a 60% winning percentage, there were 60 winners and 60 losers. Now, what you could do with your $1,000 on every single trade, you could risk as much as your whole account size here and as little as $1. So anything in between was okay. Whenever you won exactly the amount that you risked. So let's say you risked $50 and you won, you made $50. If you lost $50. Pretty easy, okay? So, see? Good trading strategy here. 60% winning percentage, risk-reward ratio of 1 to 1, or as Van Thorpe called it, a multiple R of 1, definitely profitable. What happened here? The result, 95%. 38 out of 40 PhDs lost money. Why? Because of a gambler fallacy and poor money management. Money management is so crucial. So guys, fortunately, I see a shift in the industry where I see right now that people are approaching a new paradigm when it comes to trading and realize that you need actually 6 elements to be successful. First of all, you have to define your goals. This is what I said in the beginning. It should be on top of your trading plan, and you should pull it up every single day. Why do you trade, and how much money do you want to make with trading? And if your goal is to make $5,000 per week, after you have achieved this goal, shut down your computer and stop trading. Believe me, you will give back the money that you made. Usually happens, and you have experienced it if you have been trading. Need to have the right mindset. You need the fundamental skills, like in every profession. Good and solid trading plan. You need to gain experience, like in every profession, and structured feedback to accelerate, like in every other profession. So let me briefly introduce these 6 elements to you. First of all, your goals should be so-called SMART goals, being specific, measurable, attractive, realistic, and having a time frame. Too fast? Don't worry, look it up on the internet. It's nothing that I invented. SMART goals have been out there forever, but people have not been applying them to trading. What does it mean? It means that you're very specific when you talk about how much money do you want to make with your trading. Put it down in a dollar amount here. How much money can you actually put in your trading account? Out of this money, how much are you willing to risk? If you put $10,000 in a trading account, it does not mean that you're risking $10,000. You need to stop trading after you experience a drawdown of, let's say, maybe 20 or 30%, okay? If your account goes down from $10,000 to $8,000, you should stop trading, step back from your computer, step back from being here a happy trigger finger, happy, whatever, you know what I mean, okay? And evaluate what is going on here. Why am I losing real money? Okay. You need to specify how much time do you have for trading. Can you trade every day? Can you follow the markets when they're most active? Or can you just do it in the evening hours when the markets are anyhow rather flat? When can you trade? In the mornings, in the evenings? What's your pain tolerance? How many losing trades in a row can you endure? What markets do you want to trade? You see, these are just a couple of examples. And again, in my book, I specify more examples here. And you really want to get it, rockwelltrading.com. It's right there, free ebook. Because you see how all these goals will influence the kind of trading strategy that you use. Can you actually use a trading strategy that is calling for a stop loss of $2,000 per trade if you just have $3,000 in your trading account? Not at all. You see, it's very important that you first start writing down your goals before you start looking for a strategy. Okay. Then the right mindset, and we talked about this, trading is a profession. It's not get rich quick. It requires effort, time, and commitment. And surprise, surprise, Trading is not for everyone. And guys, we've been watching a couple of slides here, and on every single slide in the bottom, I had this disclaimer which says all trading involves substantial risk of loss and is not suitable for every investor. You might have seen this disclaimer that pops up from time to time. Okay, it says, "Oh, futures, options, and forex trading involves substantial risk of loss and is not suitable for every investor." Oh yeah, futures and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the futures, options, and forex markets. Don't trade with money that you can't afford to lose. And we have seen this disclaimer so many times, and we always click on this and say, yeah, I know. But guys, if you intend to trade your kids' college fund, trading is not for you. If you cannot accept the fact that there will be losses, trading is not for you. If you know that you have a problem with discipline, but you know that discipline is important for your trading success, trading is not for you. Right now, take a look at your desk. Take a look at your office. Do you see papers all over the place? Open your drawer. Is this nicely organized, or do you, all the pens or whatever you have keep in your drawer are all over the place? Well, these are some indications that you might have a problem with discipline. I know it's always funny if a German is talking about just discipline here, but you know, discipline is so important, okay? Be disciplined in your trader. Look on your desktop. How many icons do you have on your desktop? You know what I mean. If you know that you're short fused and have a problem controlling your emotions, then trading is not for you. Because, guys, believe me, you can yell at your screen and jump up and down and curse your screen. The markets will be really unimpressed by this, okay? So all that happens is that the market achieved its goal of making you emotional, and you make irrational decisions here. All right. Last thing, if you want to get rich quick, believe that this can be done without any investment in time, effort, or commitment. Trading is not for you, okay? Sorry if I discouraged some of you, but I probably just saved you thousands of dollars by telling you the truth here. Okay, so the right approach, the following steps. First of all, you want to define your goals, which should be smart, and we talked about it: specific, measurable, attractive, realistic, and having a time frame. Then you make a plan, but the third step, the most difficult step, it is to execute the plan. Okay, so let me just give you one more example here. Also, not really directly trading related, but you can see the parallels here. That's a nice picture. Okay, so let's see. Probably at any given time in your life, you might have the goal that you want to lose 10 pounds in 10 weeks. Is this a specific goal? Yes. Is it measurable? If you have a scale? Yeah. Is it attractive? For most people, 10 pounds is attractive. Is it realistic? Do you believe in experts? It is. Does it have a time frame? Yeah, we talk about 10 weeks. So here's my secret weight loss plan. Eat less, exercise more. Take fewer calories in, burn more calories. And we know that, okay? It's not rocket science. We know that we should do some aerobic exercise. We should do some sport. We should cut down on our calories. But boy, when you had this hard day at work or in the markets when you were trading, and in the evening you're coming home and you're sitting down in front of your TV, it sounds so good to crack open an ice cold beer and grab some chips, doesn't it? Okay? And instead of doing some exercise and maybe walking around the block with your dog, you just open the door to the backyard and pop on the TV and maybe a little bit of popcorn in the microwave. I'm getting hungry here. Okay. You see how it is? The same in trading, okay? So important. You need to have the discipline. And Mima is asking an excellent question. Can I learn or train to be disciplined? Yes. Yes. Actually, here's what you want to do. First thing, right now you take a pen and in the wall in front of you, you make a small dot on the wall. Almost invisible, not a big dot. Okay, just a small dot on the wall. What you want to do is you want to train yourself to look at this dot for 1 minute, for 2 minutes, for 3 minutes. Start with 3 minutes and see if you can single-minded, focus on this dot without any distractions, or if you have to check emails in between. Okay? This is the first thing to discipline, doing one thing at a time. And you will see, if you do this exercise for 10 days straight, do it for the next 10 days, you will realize, you will feel an improvement in your discipline. You will start filing paper away, because what happens is that you train your mind to focus on one thing. The reason why you have so many papers on your desk right now is because your mind is cluttered. You want to do so many things at the same time. You can't, okay? So this is a great trick. Mima, to answer your question, can this be trained or disciplined? All right, let's move on, because we have to finish here quickly. The fundamentals to trading is, first of all, trade in the right direction, buy when the market is going up and sell when the market is going down. Do not try to catch bottoms and tops. It's like catching a falling piano. Most probably you will not succeed, okay? Principle number 2, we talked about this, always know when to exit. Know that before you enter the market. Know when to exit with a profit, know when to exit with a loss. And principle number 3 is trade the right market. And based on the principle number 1, this would be a trending market. Based on this, you want to acquire the following skills. And these are the basics, like learning how to read, how to write, and how to calculate, okay? You need to be able to determine when the market is going up or down. And you can use fancy indicators, or you can just use trend lines, or looking at the charts, candlesticks formation, whatever it is. At any given time, you should be able to look at a chart and tell me whether the market is rather going up, down, or sideways. Based on this, you need to know when to exit trade, when to take profits, and when to realize a loss. And you need to know, and this should have been the last on this slide, how to find the right market. And I clicked on the wrong button here, so let me quickly fast forward, because we already had these slides. Now we're coming towards the last slide here. So the skills were how to determine when the market is going up or down, when to exit trade, and how to find the right market. You need to have sound trading strategies. I always recommend that you use trend following strategies. Jesse Livermore, probably the world's greatest trader, said successful traders always follow the line of least resistance. Follow the trend is your friend, and he said it 100 years ago. No magic indicators. You want to use trading strategies that are based on the reality of the market, that are easy to understand and execute, and that work in multiple markets and time frames. If a strategy just works in one market, it is a curve-fitted strategy and will stop working anytime, okay? If you have a strategy that is too complex to execute, you will face indecision ahead of every trade. If you have a checklist of 20 things that need to be fulfilled before you enter a trade, you will miss the trade. And experience and feedback. Why learn from mistakes when you can learn from experience? By all means, keep a trading log. Learn from your mistakes and from your successes. Systematic feedback accelerates learning, and some things you can only learn from experience. You have to make your own experience. It's like going out of medical school, okay, or going out of law school. Now you have to practice. And yes, you will make some stupid mistakes. You just want to make sure that you learn from your mistakes and do not repeat them again. All right. Based on this, you will see, works for me, doesn't work for me. Focus on your strengths. If you found a strategy that is working for you, stick with it. Okay? If you found that you can successfully trade the euro versus the dollar, the British pound versus the dollar, but you struggle trading the yen versus the dollar, don't trade the yen versus the dollar. Focus on these two markets where you do well. I just the other day received an email where somebody said, you know what, I'm making a lot of money with my swing trading, but I'm losing a lot of money with my day trading. Dude, you know what? Stop day trading. Probably you're a better swing trader, better position trader here. Don't fund your day trading account with the profits from your swing trading. Very important here. And it's like a lawyer. I mean, once you finish law school, you can decide whether you want to become a prosecutor, a defense attorney, or tax law. So you need to find your way to specialize, and not everything works for every trader. As Ed said in his presentation previously, there are many ways to make money in the markets. There's not one single way. All right. That's the slides, how to conquer greed and fear, because we wanted to talk about this. And I promise these are the last 2 slides, exactly. How to conquer fear. Dr. Telsch here from the University of Texas says, no treatments for client are individualized. Telsch and his team frequently use an exposure-based treatment to help the client to not only face her fear, but also obtain evidence that weakens the false sense of threat that maintains the fear. What does that mean when it comes to trading? Okay. It means that probably it makes sense if you have a professional or you have a friend that helps you overcoming the fear to pull the trigger, that sits there with you, and this could be your spouse, could be a good friend, says, okay, now is a good time to enter the market. I just received my 2-minute warning here. So let's talk about how to conquer greed. Okay. It's actually from helpgamblers.com. Get professional help here. Set a weekly goal. Once you have achieved it, turn your computer off, because otherwise it will happen if you keep following the markets, if you keep trading, that you give back the money that you made. And many of you have confirmed when I asked you earlier, did it happen to you? Yes, it did. Set a weekly goal and then go away from your computer. Do something else. Here we go. Wanted to bring this up. For any questions, any comments, to read my wonderful and excellent blog that I'm writing here, go to the website www.rockwelltrading.com or email me at support@rockwelltrading.com. Believe me, these emails are going to my account. I'm reading these emails. Okay, I'm answering these emails. Give us a call. All the contact information is on the website. There's lots of information how you can overcome greed and fear. And again, by all means, you want to grab a copy of the complete guide to day trading, because everything that we talked about here is explained in even more detail there. Well, guys, thank you very much for joining me here today. Thank you very much to fxstreet.com for putting together these great webinars, offering them for free, quality education with excellent speakers here. So the next webinar is coming up in probably another 2 minutes, okay? So we got to wrap it up here. I hope to see you guys personally, maybe at the Trading Expo that is coming up here in Pasadena, California. So I'll be there. Look out for me. If you are there, say hi. And met some of you already on previous Trading Expos. And maybe we can meet in Barcelona in October. How does that sound? At the International Trading Expo, organized here by fxstreet.com. You all have a great day, and I'll talk to you soon.